Welcome back, traders and investors, to the third attempt at Benzinga's pre-market prep, brought to you by Benzinga Pro. Give us a sound check. We hope we're doing well here this morning. Dennis, in the news here, they're already chatting about it. Tempur-Pedic TPX. What do we have going on in it?
TPX with it looks like, preliminary numbers coming out. They're looking at Q4 sales, 770 versus 741 million, which seems okay, but then there's all this other news as well. They're terminating a mattress firm contract, cease doing business with this mattress firm in Q1 2017. They're looking at the highlights there. Net sales to the mattress firm were 21% on a global basis, so basically they're losing this big contract here, and that is why you're seeing TPX trade down significantly here in the pre-market. Bad news before, stock down 25% here now. You can see back in September you had the big gap down as well. This is actually gapping below those lows that we got down to in October. $50 was the support level in October. I know it's the regular, or the pre-market session, and a lot of times, we say support isn't taken out until you actually trade through it in the regular session, but if this thing opens under 50, that is very concerning.
Yeah, doesn't the stock do this all the time? It seems like that TPX, it has these kind of disasters.
Does.
And then it goes back up. Dennis went off the board at 63.18. Boy, oh boy, we are taking a shellacking here. Let me pull up my pre-market chart. I see a low at 43.11. Getting a little bit of a bounce based on the fact that we're getting a bounce. Dennis, I'm just not in the mood for a lunch bet today, but I would say,
I'm not either on this one.
I would say the low of the move definitely, or the low of this the pre-market session could mark your low of the day. Certainly, if I was short and I missed that 43.11 print, I would have some bids coming back in before it got ahead of that level. We haven't been under $50 since a long time. This was back in 2015. That low that you had in 2015, under $50. Let me give that for you. 46.51.
Yeah, so same thing. The only thing is, like you were saying, and Ace was pointing out on the show too, this is a little bit on the comeback trail. We are significantly out those lows, 5 points higher here. Let's see what it does in another hour. If this thing could regain 50 and hold that level, that would, at least be, strong enough that it could bounce here. And, talking here, okay, well, firm's going to lose this contract, which it looks like was 21% of sales. I'm just reading from the pro there and putting two to two together. They're knocking the stock down 23%. So they're repricing for this loss of this contract. But that being said here, if the stock can regain 50, maybe, you could start to see the comeback continue here. But 50 is going to be a critical level for TPX to trade with today. Other news here, there's not a lot of earnings stocks here today, but there's a ton of earnings stocks this week. But we got to go over to Fitbit here as well, because Fitbit is getting the beats here again. FIT trading down another 10%. They're cutting jobs. Here, I'll just give you from the headlines here from the pro. Fitbit here is down 11% following layoffs of 5 to 10% of the workforce. I mean, they're cutting expenses because sales are declining for this company. And we know Fitbit has struggled here for a long time. We've called it a one-trick pony. It's starting to look like that one trick is not even working that well anymore. And this stock now hitting new all-time lows.
New all-time lows for Fitbit here. We've hit 630 on a couple occasions. We've gotten a bounce. I don't know, trading down 71 cents here. Just, I guess, using your half and your whole numbers here, 6 even if it takes out that 635 low.
And then let's jump over here into other stocks that are moving. You got a few stocks trading up here today, but like we were saying earlier, almost everything is trading down. You got Disney bucking the trend. They caught an upgrade over at Morgan Stanley. You've also got, if I'm just running here, I had them written down. Where am I? Oh, here it is. I'm looking at the wrong page. So Disney upgraded Morgan Stanley at overweight. They, you got to talk about that 110 level here again in Disney. I've actually shorted it here in the pre-market. I think if it gets over 110, I'm out. This is just I'm just making a call that, weekday here today. I think that 110 might still hold. We've talked about the big seller in the open book. So I don't think, 110, I don't think they can take out. If they take out 110, I'll cover my short though. So short-term trade for me, just fading the Morgan Stanley upgrade. It's a weekday and you're getting a little pop here on Morgan Stanley upgrade, but I don't think there's enough gas to take out 110.
All right. I mean, Dennis, sticking with the technical here. This stock's been a subject of like upgrades, downgrades quite a bit lately, and Bulls and the Bears battling out. I mean, you can use 110 on the open. I mean, pre-market high just above there, 110.05. If you don't want to mess with the open, maybe they get that open above 110, run it to 110.40, 110.50.
Sometimes they do that
Yeah, and then come back down through that
to
level.
stop me out.
Yep, to stop you out. I think you need sustained closes over 110 here. Also, maybe I'm not necessarily going to go short. Just saying, if I was long, I'd probably be happy how it's trading and take the profits with the SPOOs. Pretty deep in the red here, now making a new low on the session.
American Express gets upgraded to keep Riet here today. It's trading slightly down, so it's not getting enough gas to actually trade higher here today. You've also got a couple other upgrades of note here too. Goldman Sachs a little bit busy. NetApp, NTAP, they're upgrading that to buy, and they are also upgrading Dick's Sporting Goods, DKS, to buy. Both those stocks trading up in the pre-market. Dick's is trading up about almost a buck here in the pre-market, and we always talk about rotation here, Joel. And what do you think? So this market never seems to be just money coming out of everything. Although in the pre-market, that's kind of looking like what it is. But I look at this and think, okay, well, if money's going to fly out, some of the riskier stocks, what stocks are they going to go into? And I always think, I get, a little more defensive, maybe, some of the food stocks. But, what about retailers? Because the retailers have been beat up pretty hard. And it always seems like the money flies into stocks that, have been beat up when, you see the overall market start to roll over. So seeing Dick's Sporting Goods trading up on the Goldman Sachs upgrade here today makes me think, who knows? Maybe retailers catch a little bit of a bid here this morning. We just got to watch, obviously, everything is getting hit here, though. So, a down day when you're down 9 points, it's hard to be a buyer of anything.
Yeah, I don't know if it's like sell everything day. Dick's Sporting Goods pre-market high. We just had a couple trades up here near 53, 52.70s actually your pre-market high. I think overall this stock has held up a lot better than some of the retailers. So many of the other ones, 62.88 high back at 51 and change. So this one, I don't know. I mean, it's held up better, so you think it could go south if the rest of the retailers go south. I don't know. I don't know if it's going to be the retailers here, Dennis, with the whole Amazon effect of whatnot. Not sure where the money's going to flow today.
Well, we'll keep an eye. In 30 seconds, we're going to get opening imbalances here, and sometimes that'll be a little bit of a tell, too, because institutions start putting their orders in, very early in the morning, and sometimes at 8:30 when we get these numbers in 10 seconds, it'll give you a little bit more. But if I'm looking at really what is weak in the pre-market, I'm seeing the banks very weak here. I'm seeing, profit-taking, which makes it Goldman trading down almost 2 points, JP Morgan down 1%. I'm seeing Bank of America, which just came out with 124,000 shares sell imbalance, trading down almost 1% here. I'll give you those imbalances right now. They are mostly to the sell side here this morning. DuPont, I got a 31,000 share sell balance. It actually had a downgrade today as well. It had been on fire before today. Looking Pfizer, bucking the trend, actually has a 103,000 share buy imbalance here this morning. So that's one to keep an eye on. If you look, Pfizer just starting to catch a bid here. A couple people just bought the stock up a penny here just because of that buy imbalance. Alibaba, 50,000 shares to sell. We know Baba here, $100 got to be a big number here. Maybe the first time back down there, maybe you can catch a little bit of a bounce here on Alibaba. Nike, 26,000 to sell. That's a small sell imbalance there. Coca-Cola, 63,000 to sell. Overall, though, it's kind of still looking like a lot of money coming out of a lot of different stocks. Although I do see some of the healthcare stocks trading a bit higher.
All right, taking a look here. You mentioned a lot of ones here. Coca-Cola, did you say that was a buy or a seller?
63,000 shares to sell. But you know what? I look at a stock like, here's a classic example. A stock that's a little bit more defensive. A stock that, got beat up on Friday. And you think, okay, well, maybe, if the money's going to roll out, it's got to roll into something. Why not a stock like Coke? Coke has a nice dividend of 3.38% here. And if you're going to get defensive, maybe you're going to roll into a stock like this. So this is a stock I would not be shorting. I don't know if I'm necessarily buying anything when we're down almost 10 points now, but definitely not a stock that I'm looking at to short off the hop.
All right, the other one you mentioned of interest, Pfizer. When are these healthcare stocks going to catch a bid here? Kind of cramping up here at last few days in Pfizer. We've had a tight range. over the last 3 or 4 days, let me give you that. 3150 is the level there. You've had four highs right within a dime area between well, a little over a dime from 42 to 52. So keep an eye. Big seller lurking at 3150. We take that out. Got some room to move to the upside in Pfizer.
And let's jump over here to earnings preview for this week. And I've got a ton of stocks on my list to preview here. Probably won't get through them all. So if there's any stocks you guys want to preview in the chat, today is a light day. I mean, we've got a few earnings reports, but there's no major companies reporting. But tomorrow is a big day. We'll start in the pre-market, and we're going to get Under Armour. We're going to get companies like Pfizer and UPS. But then after hours, we're going to get some big ones. We're going to get Apple. And everybody's going to be looking at this Apple report here. That's going to happen after hours tomorrow. And Apple has been a stock that has pretty much been on fire here for the last month and a half. Stock, was thrown out to the woodshed there right around, late November when it started to drift back down to the $100 area. And people have come in with their buying shoes on, and they're, starting to get a little more belief here in Apple. Apple trading down a dollar in the pre-market, obviously, with the overall market here. But what are your thoughts here on Apple ahead of Tuesday's report?
I mean, just such a nice run, going into this move here. I mean, if you're going in, you've held this. I'm not talking long-term portfolio, but if you've, had this in an intermediate or swing, I mean, nice move. I mean, high expectations for it. I know I've seen some people dropping estimates on iPhone. Gene Munster was actually kind of bullish on his. So I don't know. Maybe it would be the situation where if you don't want to let it go, maybe you get some premium in the calls. I don't know what the 125 calls are playing, but you could play it that way or hedge yourself with some puts on the downside because just based on the chart pattern, they're really, really going to have to blow things away.
Just the chat alerting us here too, Spinner, talking about the Rite Aid, just drifting away here. And Rite Aid is down 15% here this morning, and they are adjusting the price, it looks like here. So Walgreens, Boots Alliance, Rite Aid enter into amendment and extension to merger agreements. So the parties agreed to reduce the price of each Rite Aid stock to a maximum of $7 and a minimum of $6.50. Walgreens to divest 1,200 Rite Aid stores. So here you are, and the stock is now trading down another dollar. I mean, Rite Aid is in. If this deal does not go through, Rite Aid is in trouble. So you can look at this and say, wow, what's my downside? Because Rite Aid, this is now trading below prices where this thing was prior to the announcement of the original merger. Well, now they've lowered the price on you. Obviously, we know there's been some antitrust issues here. They've tried to get Fred involved to try to help through those issues. That hasn't been the case. Now they're lowering the price here. Fred's is actually trading higher on this news. It's trading up at $15 here right now. But you look at this and you think, man, I don't know if I want to be in this Rite Aid here when the stock's now down another 15%. They've lowered the price on it. And I don't know if the company's viable if this doesn't, if the deal doesn't go through. I don't know. Can Rite Aid survive on its own? That's going to be the question that I'd be asking if I was investing in this.
Now, are they doing this to satisfy regulatory concerns?
I think they're trying everything to satisfy regulatory issues. And you know what? I don't see really the antitrust. I don't agree with that. I think they should have been allowed here in the first place. But we're not we're not antitrust people here, Joel. So in my opinion, doesn't count on it. But I don't think Rite Aid here, merging up with them. The two powerhouses you really see are CVS and Walgreens Boots. Rite Aid is just a smaller player trying to survive, and obviously they're having a difficult time of it. And Walgreens coming in and buying would have been good for the company here. Now that it looks like now they're mending the deal and they're trying to get it pushed through. A lot of people are very concerned here, though, that this deal obviously might not go through because we're trading down another 15%, well off that $7 maximum price that we just talked about, and it's already traded 1.7 million shares here this morning.
I really don't know what to say about it now after it coming back down. This is the area where it came back down the second time after it was rumored. I guess the only thing that we can really take away from this is when there's a deal on the table and they talk about a $9 takeout price and it gets to $8.77 or $8.60. Why not? I mean, What are you waiting for? Better places to put your money. I don't know. It looks like the ARBs have already, puked this out, at least on one occasion here, two occasions.
This is the second occasion.
Yeah, third occasion. So, I don't know. I mean, it's hard to say, what's going to happen with it now. I mean, if you want to go back to the area where it had support, try it on the long side. But, I don't know about this deal, and just the only thing is, when you get that gift, can't look a gift horse in the mouth. We're actually below that previous area of $6 at 550 now, so not. I bet you there's a lot of arbs licking their wounds on this one, and won't be so happy to play that potential merger.
Well, and the risk cards, you've got to look at it here. There was a $9 deal on the table. Now they just lowered the price to 7. So if you were saying, okay, well, I'm buying this at 6.93 and I'm doing my risk return, thinking, okay, well, if the deal does go through, I'm talking about on Friday, if the deal goes through, it's going to be back at 9. So I got 2 points upside here. Well, now when it closes at 6.93 and they move it down to 7, well, now I have 7 cents of upside. I don't want any part of this, and that's why it gets hit hard too. So even if the deal gets going through, there's so much risk that the deal doesn't go through. That's why it's got to discount it from the new price, which is $7. So old price 9, new price 7. You're doing a discount from that. You're going to get hit hard here. So very difficult here to be coming in this thing because, like I said, if this deal, for whatever reason, doesn't go through, and maybe it does, but obviously we've been working on this for a long time. The stock, Rite Aid could be in some trouble.
And Walgreens Boots Alliance holding up pretty well here. Haven't done much in the pre-market,
It's
but
a small deal for them too, really. It's a lot of stores, but it's
yeah,
not like a huge amount. And Walgreens is actually trading up on this too. It's trading up 20 cents.
yeah,
The Walgreens shareholders saying, "What the hell do we want Rite Aid for? This is good news." And now we have to pay less for it if we get it. So I guess this is good news for WBA.
yeah. Good support here under 81. You can see we've dipped dipped below it 3 times in 2017. Have recovered. If you're looking for some major resistance, triple top at the 82.30 area.
Jumping back to the earnings parade here. So, like we said, Tuesday night we're going to get Apple. We're also going to get ExxonMobil here on Tuesday. And, it's interesting because Chevron and Exxon used to always report on the same day. They didn't do it this quarter. So, we've already heard from Chevron. CVX did get hit on their earnings report on Friday. ExxonMobil held up fairly well. It just kind of hung out there. So, interesting. A lot of times when you see Chevron get hit, Exxon will get hit too. A lot of pair traders out there that put those two stocks together. But Exxon held on okay. Although Exxon has been very quiet ahead of this report. We've gotten a little bit of resistance at 86. We've got a little bit of support at 85. You can say it's been running in the channel since then. But, Tuesday morning we can get the report here, and obviously we always say technicals take a back seat when we get fundamental information coming out here. But quick thoughts, technically speaking, on ExxonMobil.
Low expectations as opposed to high expectations in other stocks we've been selling off here. A couple lows under 85. Actually, we've had 3 lows. The lowest of the moves been 84.59. So I'm looking at, let's call the 84.59 to 75 area. Your support on the upside. Boy, someone's really, after the big drop, really trying to wiggle out at 86. So 1, 2, 3. I'd say 5 out of the last 7 highs, just under 86. Those are your levels. Keep an eye on an ExxonMobil ahead of their report.
Then jumping over to Wednesday, we're going to hear from Facebook, and obviously everybody's going to be looking at this report. We know the stock has been running up here very well in 2017. It's been one of your best stocks. Started the year down 115 bucks, now up in just 3 short weeks, up or I guess 4 weeks now, up to 132 closing. It's down 50 cents here in the pre-market with the overall market, but Facebook's been running ahead of the report. Is that concerning to you, Joel, or do you think this run continues?
High expectations, right? I mean, if you're long into the report, why not book some profits ahead of it? Just getting up near the all-time high. You can see it challenging here on the daily chart. Your all-time high, 133.50. Snuck your head up. It hasn't quite gotten there yet. 133.14. That's been the high. The move trading a little bit down in the market, pre-market here in sympathy. Just keep it back up to 133. Look for that resistance. Coming on the downside, I won't say 131 because that's too close, but maybe under 130. If it slides under 130 ahead of the report, you may want to take a look at lightening up. Great move though ahead of it. 2017. We rallied from the 115 area up to 130, so nice move so far ahead of a big report.
Thursday, we're going to get a ton of big companies here, and the biggest of them, Amazon, going to report Thursday night. AM Zebra, and it's trading down 4 points in the pre-market. That's because the S&Ps are trading down, so just down with the overall market. But here's Amazon. It's not far off its all-time highs here either. I mean, 847 is what we're talking about on Amazon. So both of these stocks, Facebook and Amazon, within striking distance of their all-time highs. You wonder if the earnings reports can propel them higher here. But these stocks are loved again. These stocks were hated for the back half of 2016, kind of forgotten a little bit, and in 2017 they've been loved again. Amazon straight out started the year down around 750, up at 835, so good year for Amazon too. Fang is back, and you wonder, if they just find excuses, even with Netflix. We already heard from Netflix, part of the Fang, and they did pop Netflix on the earnings, and Netflix had a little bit of leakage after the earnings, but it's right back up again. So, Netflix is right near where it was, when it gapped up there. So these are just love stocks, and I feel like, it's hard to fade them. That's why I'm a little bit scared to, say go short ahead of the report because expectations are lofty. It's sentiment towards these stocks, and they're kind of loved again.
And got hit last time and then battled all the way back. Remember, they
Dead.
knocked it down. I don't know who it was. I don't know if it was Frankie 23 or Linda Stegel. I can remember them picking that up around that 700. Well, we didn't quite get to 700, 710, 720 area. Now you claw your way all the way back, this close back to all-time high. Once again, long-term investor doesn't have to sell the stock necessarily. You can sell maybe some out-of-the-money calls with some nice juicy premium in it, or if you don't want to do that, worry about the stock getting taken away. You can always maybe pay up some premium on some downside puts, or do something conservative like Nick Shaheen would. Sell the credit put spread. Just something to try and protect yourself in case they don't blow the report away.
Then also we're going to hear from Chipotle, CMG, and that stock has come back a long ways as well. I mean, not a bad 2017 for this stock too. Started the year at 371, and now we're looking up here at 420. But the only thing with Chipotle, I'll still say, I feel like there's a lot of people burning this. I know if you look out to a weeklies, it's actually starting to look like it's found some good support down there. Where we bought it multiple times. If we just go out even to the dailies, in the 360 area, we keep finding buyers. But as we've come up here, we've kept finding sellers in this 420 to 440 area multiple times as well. So this is where Ackman, started diving in here as well in the 420 area. It's traded down a couple points in the pre-market, but CMG thoughts heading into Thursday night's report.
Well, 420 looked like it was the level for a long time and held up since October. We took that out. 425 now is the new 420. You put a double top in there at 25.10 and 25.61 on Wednesday and Thursday. Coming back on the downside. Just hard to find great support in this until you get closer to that 406 area. January 24th, your low was 405.78. So kind of in the middle of no man's land here. Lowered expectations. I know they've dropped their earnings estimates a few times, so let's see if they can beat lowered expectations.
Also going to hear from GoPro, GPRO. This stock here come back a little bit. We did hold above 10 for a few days. It's traded down in the pre-market. I get a little bit concerned, not that Fitbit and GoPro have anything to do with each other, but for some reason they do sometimes track each other. Fitbit obviously getting hard here on its layoffs. GoPro down just slightly here. I think GoPro it needs to hold the 10. It's got to close. It's got to hold $10. There's a gap in the chart. It starts getting down below that 981. Then you got a gap to fill there. And if we talk about one-trick ponies, I still feel like GoPro is a one-trick pony as well.
Yeah, Dennis, you're talking about that gap area, the gap in GoPro. I'm not sure. I think that was like over. I think that was an upgrade that did that. The gap.
Was it an upgrade or was it some guidance? I can't remember either. Goldfish memory on me 5 days ago. If anybody in the chat remembers why we gapped up on GoPro 5 days ago, let us know there. But regardless, the gap is in the chart, and gaps don't lie, right, Joel?
Right, 947 and 981. That's a pretty good size gap in a $10 stock. Just for me, people are trying to wiggle out here. You hit that 1044. That was on the 24th, the day, whatever the news was to send it up. But sellers have been coming down since then, since the 1044 high, 1026, 1020, 1015. Looks like we may even get a lower high today. Maybe let's see what happens at the close. 1007, below 981, as I said. Air to fill the 947.
Also, going to report on Thursday is FireEye, a stock we haven't talked about for a long time. FEYE starting to leak again. It was down, it got a little bit of a decent 2017 a week and a half ago, and the last week it's been ugly here, and now it's closed, near its lows, 1260, trading down another nickel here in the pre-market. FireEye is, the forgotten child here. Obviously, it was a $90 stock, $97 back in 2014. It's now 12 bucks, and you wonder here, security, is there any value here? I've never really looked at this, from a value perspective, is there anything here or not? I could go maybe crunch numbers and see if there's anything, but in any regard here, 12.55, the stock has been beat up. We're going to get an earnings report on Thursday here. What are your thoughts here, FEYE?
I mean, just a leak here, slow leak after getting up to 1350, 12, just under 1250. Looks like some decent report support. Three lows at the 1260 area. We'll keep an eye on that. When I think about these cybersecurity stocks, I mean, if they haven't gotten a pop now, under the new administration, more security and things like that, I don't know what's going to give them a boost. I mean, this was a former high flyer. We'll go back to the monthlies here. That stock hit 97.35 and just wallowing here at the $10 to $13 level. So you wonder if the run is done in FireEye.
Jump into Friday. You're not going to get much on Friday, but you're going to hear from Clorox and Hershey's, a couple more defensive stocks here. Just quickly talk about Clorox, CLX here, what we see on the charts here. Stock is traded down in the pre-market. Again, though, this is one that's a little more defensive, and I wouldn't be surprised if some buyers do emerge in something like this. I don't think this is something that gets hit as hard as the market. I'm looking pre-market. I can see it trading out at 119.75 right now, which is down 75 cents, but this is a classic defensive stock, one that, if the market starts to get beat up, you start to think like maybe this is where money could flow into. I don't know if it's going to be a fly out of everything day here, but Clorox is one that I've got on my defensive list.
And 122 is easy to see the major resistance in this
Yes.
one. 4, 5, 6 highs right there at 122. So if in any, if we go into rally mode, keep an eye on that. On the downside here with the down market, S&Ps have recovered off the lows, only down 775 now. To me, just eyeballing it, 118. That's the area you got to hold. Below that, easily fall to 116 and below. So range bound at least here since the beginning of the year after you had that little stint at 123, 118 to 122 trading range in Clorox.
The stock that finally showed a little bit of life on Friday was Bristol Myers, and Bristol Myers had been hit again and again and again. And even got hit on Thursday as well, going all the way down to $46 after their earnings report there. But then buyers started to emerge, and we bounced off the 46 here. And now, on Friday it was a decent day for it. On a day that healthcare actually, some of the drug stocks actually caught a bid. Bristol Myers actually got as high as 49.51 or 48.60 before settling back at 47.74. It's not trading down here this morning. Bristol Myers is trading flat with the overall market being down significantly here. I kind of feel, I don't know why, I'm feeling like I might try the drugs here today. So, you're seeing, we saw a buy and bounce already in Pfizer. This one is trading up a couple of cents here. Bristol Myers just hanging out here flat, but this is a stock, it kind of bucked the trend a little bit on Friday. I feel like, maybe we could get a little bit of a bounce here because it's been so ugly here for Bristol Myers in the last 2 weeks. Maybe we could bounce to 50. Maybe there's a trade in here for a couple points.
Man, just look at that daily chart. I mean,
I'll talk.
it's like, it's ugly. Everything since this thing hit 77.12. Merck's knocked it down a few times. I'd like to see it come down maybe closer to this 46 area. Maybe do a retest of that. Trading flat in the pre-market, so that's a good thing. I guess if you're looking some follow through here, not sure how it's bid in the pre-market. 48.62. That's the lowest high that this stock has had. Holy mackerel! I mean, this goes back in the middle of last year. So continued upside 48.62. Above that, things open up to the middle $49 handle.
Another stock that showed a little bit of life on Friday was Sarepta, and this is one that I wish I sold part of my position. I wish I would have sold it up there, all there in the 36 and 37 handle there, because now this swing trade or this speculative investment has leaked all the way back down to the price where I bought it here. It did take out, this is now I'm just talking day trading action more than anything. It took out the 30. I think you probably hit some stops as we went through 30, but then the big thing was it regained 30 very quickly. A couple hours later, it was up above 30 again, and then I found buyers who were towards the end of the day. So a lot of times what you'll see is the stock comes down to a critical level, takes out the critical level, stops the people out, and then reverses. And and that's what we kind of saw on Friday here. So after just hanging out in the pre-market, hasn't had any trades here this morning, but this is a stock that I wouldn't be surprised if you saw a little bit of life. And I think it's short-term life here because drugs have been so under pressure. But there could be a little bit of a 2-day move here, so I wouldn't be surprised if it caught a bit actually today.
Not at all. Just broke an 8-day losing streak on Friday here when it fell from 37.89. Had a little pause, one up day, one down day, but then kind of straight down. Let's see what happens. Double top, 31.04, 31.11. So we'll see if you get maybe the short-term sellers out there, and then things really open up in the 31 handle. But, nice move on Friday. Broke a long losing streak. This one I like a little bit better than the Bristol Myers.
Gold's starting to catch a little bit of a bid. We are slowly moving up. Some of your gold miners starting to come with some buying balances here. Barrick's now 20,000 to buy. It's trading up 0.75% in the pre-market. So when we were talking about a half an hour ago, a lot of these stocks were looking like, I was kind of wondering why gold wasn't starting to catch a bid. But as you get later in the morning, more money managers come into their desk saying, hey, I want to get a little more defensive here, and that's why you're seeing gold start to catch a bid here, overnight here with the uncertainty with Trump. The whole uncertainty thing is, it's maybe not even just specifically what he's doing. It's like you don't know what he's going to do next.
Yeah,
that's the concern. Like he's aggressive, and it's almost an aggressive where you're wondering if he's thinking through the steps and possible repercussions, or he's just going for it and seeing what happens. I mean, that's a scary way to run a country, though. Being that aggressive. It's 8 days into his presidency.
Yeah, that's true. I mean, a lot of the moves that he's doing now are powers granted him by the executive branch. So before you do things for taxation and the budget and stuff, might be a different story with oppositions from his own party and surely the Democratic Party. So that's one thing you have to keep in perspective as well.
Just looking here, Bristol Myers now has a 74,000 share buy-in balance as well. Merck 53,000 to sell. It's going the other way here. AT&T 57,000 to sell. But if I'm playing setups here, and I always around this time like to tell you, how I'm setting up my day here. Again, when I go through my day, I set it up like first question I ask: is it risk on or risk off? It's apparently risk-off day. I'm seeing financials weak, S&P futures weak, a lot of cyclicals trading weaker here this morning. So that's telling me, at least a risk-off morning. So now I want to position myself for the open in a way that, I may be short stocks that are a little riskier and, getting a little more defensive. So right now I'm looking, if I'm playing, stocks that are weak, stocks like, some of your financials might open not down that much, I might try to short those. If there's some defensive stocks that open too far down, I might actually play those from the long side here. So a stock like AT&T is on my radar for today. A stock like Verizon also on my radar as more defensive plays. So if those were to open down significantly, because the overall market is down, I might actually try to buy those and buck the trend and actually try and go long. And food stocks, same things. You think like a General Mills, you think like, some of the other food stocks that are out there as well. Some of those, could be the beneficiary of a weaker market here. Tobacco typically does okay on a weekday, but, this market can reverse in a hurry. So all of a sudden, if they come in here and they start buying stocks around 10 o'clock, they'll start hitting those other stocks. But what I'm saying is not all stocks move together. It's all about identifying which stocks might be stronger, which stocks might be weaker. As of right now, I'm looking at some of the more defensive names, and looking to buy those on a pullback here this morning.
What is the most important group coming out of Linda Stagel? And I guess your clear leaders in 2017 have been the financials, right, Dennis? I mean, expectations. I believe we have a Fed meeting coming up this week. So, I mean, it's hard to put an exact finger, but I would say the financials have been your leaders for the majority of the year. Dennis, do you have a...
Yeah, financials is what I'm watching. The first thing, if I'm trying to determine risk on, risk off, the first thing I look at is the financials. What are they doing here this morning? And overnight, you look. First thing I do is I usually look at the European financials. What do those do overnight? Because those can be a tell as well. Deutsche Bank trading down 2% here in the pre-market, coming back to $20. You got a stock like Credit Suisse CS trading slightly down here in the pre-market. Barclays BCS, I'm just going through, is down 2.5%. So you're saying overseas, the banks are a little little bit weak. Sometimes that spills over to our banks. And, when we look at and we do the test, Citigroup trading down 1% here in the pre-market. Goldman down almost 1% in the pre-market. JP Morgan down 0.75% in the pre-market. So it's telling you, okay, financials weak, that's spilling over here as well. So Catalyst was probably Trump here over the weekend. First thing they start selling is the financials because they bounced back a long ways too. The financials are kicking around right near their highs. Bank of America right up there near where, it was trading, 23.36. There's not, if you're looking at it saying, well, there's all kinds of resistance, 23.20, 23.40, 23.50, which we've talked about in the book being all kinds of resistance. If you're a money manager saying, well, I don't think it's going to have the gas to get through there today, I'm going to maybe start to hit some bids. And now it's trading down 12 cents, 14 cents here. And you start to think, well, maybe, that continues as more money managers here start to come to their desks this morning and start to hit stocks as they're worried about a little more uncertainty.
All right. Also, I just I believe it's Fuzzy in the chat here. Thoughts on EPD? And boy, Fuzzy's throwing a tough chart at us this morning. Stock had a
Little
really
tough.
great bump up here from 28 to 30 and a quarter. Now just starting to give it back. Gaps on the upside, gaps on the downside. For me, I kind of like to see. I watch this in early trading and see if it can get back above 29. I know the close or the low was just below that at 28.80, but 29.09, that was your close on Friday. So if it really wants to get up there, try and fill the gap. It's not going to have any problems clearing the close. If it starts to go wayward here, you have a low on Friday here at 28.80. The low just below that catches you at 28.60, and then you're running a lot of air underneath down to 28. And a guest mentioned EPD last week. I can't remember who that one was.
I'd say down at 28, that's where we had the 3-day move from. It gets down to that 28, I get interested in it here. 29, where it's trading this morning, or it's traded at in the pre-market. This is just, in the middle of nowhere. This is a total set on hands trade for me there. But it gets back down to 28, it gets interesting because that's where, it had the breakaway gap out,
There you
for
go.
breakout from. So I look at this, pulls back, maybe retest at 28. We say the old, resistance becomes new support. That's maybe where I try it from. 29 just feels too high.
Yeah, 28 to 30, a lot of air. And what Dennis is referring to here is that 28 was resistance going back until August. Took quite a few shots at it, and it really wasn't a gap and go on Tuesday. It opened up higher. If you were really quick off the open, it opened it just at its opening print, 27.95, ticked 94, and then was off to the races. So good point there, Dennis, on 28. 2 minutes left here, Dennis. S&Ps are hanging out down $8. Any other stocks or issues? I just want to comment on these retailers. Look, did you see this Kohl's here making a
Yeah.
new low of the move?
It's
Macy's
ugly.
making it. Well, Macy's didn't make a new low of the move. The retailers,
They're a
reported.
mess. The big department stores are a mess. We've talked about this for a long time. I was saying if you put a gun in my head and you had to make me buy one, it would have been Kohl's. I don't like any of them. This Kohl's chart is ugly, ugly, ugly. These things are so out of favor. And it's not only that. It's, like if everybody's going to start buying everything on Amazon, big square footage. But, Macy's is a little bit, I like the Kohl's because they're more of a discount retailer, or a discount apparel retailer there, as opposed to Kohl's, which feels a little bit more upscale for the most part there, or as opposed to Macy's. So, that's why I like the Kohl's better, but I don't like any of them. So I just, these charts are ugly. I think you can get bounces in these things, but the sentiment towards these stocks is terrible, and it's very difficult to turn that around.
All right, Rob Hood, just to end the show here, showing a tough chart at us. RYAM, Ryanair Advanced Materials Incorporated, made a nice move on Friday, settled near the high, 1738. So we're trading above the close. That's the first thing. You want to see follow through that. On the weekly or on the daily, it looks like you've had a nice run up, but if you go longer term in this chart, you can see back in June of 2015, this stock hit 1770. So if you're looking for another target on the upside, maybe those folks back from June or June of 2015 will be looking at an exit. There you go. As you can see, On a shorter term chart, it looks like a little overdone, but on a longer term chart, it looks like you still have some more.
I think this has earnings coming up too, so just beware. I'm not sure if it's today or tomorrow, but I'm pretty sure. I just see the last time the report is October 31st, so pretty sure this thing has earnings coming up, and that, obviously, is going to be your mover.
All right, Larry says it's gold day. Let's see if gold
I think so
futures.
too. I
Yeah,
think gold could catch a bit.
yeah. Uncertainty. Sometimes you get a flight to gold. All right, folks. 9 o'clock. Thanks so much for sticking with us. Sorry about the late start. We'll be back tomorrow morning to talk some options with Nick Shaheen and get ready for some big earnings reports on Tuesday and for the remainder of the week. Have a great trading day.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.